Listen, I need to tell you something that's been keeping me awake at night. And if you hold XRP or you're thinking about getting into crypto, this could change everything for you. What I'm about to share with you isn't some fantasy prediction or hopium. This is cold, hard data that shows we might be on the verge of the biggest supply squeeze in XRP's history. I've been tracking the numbers obsessively, and what I found will blow your mind. The XRP supply on major exchanges has literally vanished. We're talking about a 90% collapse on Coinbase alone. Think about that for a second. 90%. That's not a typo, that's not market manipulation, that's whales making moves that could send this thing to the moon. But here's what gets me really fired up. While retail investors are sitting on the sidelines wondering if crypto is dead, the smart money is positioning themselves for what could be the most explosive price movement we've seen in years. And I'm going to walk you through exactly why this is happening, what it means for your portfolio, and why missing this could be the biggest financial mistake of your life. Before I dive deep into these numbers that have me practically jumping out of my chair, let me paint you a picture of what's really happening behind the scenes. You know that feeling when you walk into a store and the shelves are empty? That panic buying mentality? Well, that's exactly what's brewing in the XRP market right now, except most people don't even realize it yet. I've spent the last week verifying these numbers because frankly they seem too good to be true. But here's the reality. Back in June, Coinbase was holding approximately 970 million XRP across 52 different cold wallets. That's nearly 1 billion tokens just sitting there ready for trading. Fast forward to mid-September and brace yourself for this. Only 6 wallets remain active, holding a measly 99 million XRP total. Do the math with me here. That's an 89.8% decrease. We're talking about 871 million XRP tokens that just disappeared from the most liquid exchange in the United States. Where did they go? They didn't vanish into thin air. Smart money pulled them off exchanges, which means one thing: they're not planning to sell anytime soon. This is what we call a liquidity crisis in the making. And if you understand basic economics, you know what happens when demand meets severely restricted supply. Prices don't just go up, they explode. And the scary part? Most retail investors have no clue this is happening. Let me break down why this matters for your wallet. When tokens are sitting on exchanges, they're essentially ammunition for sellers. Every time someone wants to dump their XRP, those exchange reserves get hit. But when those reserves drop by 90%, every single buy order becomes a battle. Buyers start bidding against each other, driving prices higher and higher until someone blinks. I've seen this movie before, and it never ends well for people who aren't paying attention. The 2017 bull run, the 2021 explosion, they all started with supply crunches that nobody saw coming. But this time, we have the data. We can see the setup happening in real time. But here's where it gets even more interesting. This isn't happening in isolation. While XRP supply is getting squeezed, Bitcoin just saw its second largest accumulation inflow of the year. We're talking about $3.4 billion in Bitcoin moving to long-term holding addresses in a single day. These aren't day traders looking for quick profits. These are institutional players positioning for something big. The timing of all this is absolutely critical, and here's why. We're sitting just days away from a Federal Reserve decision on interest rates, and history is about to repeat itself in the most profitable way possible. Since 1980, every single time the Fed has cut interest rates while markets were at or near all-time highs, markets were higher 12 months later. 100% success rate. Not 90%, not 95%, 100%. Think about what that means for crypto, which is essentially a leveraged bet on risk on sentiment. If traditional markets are going higher, crypto isn't just going higher, it's going to the stratosphere. And XRP, with its supply locked up tighter than Fort Knox, could see moves that make 2017 look like child's play. Now, I know what you're thinking. This sounds too good to be true. Where's the catch? And I get it. I've been burned before too. But here's the thing about market cycles. They don't care about your feelings or your past experiences. They operate on supply and demand fundamentals that are as reliable as gravity. The difference this time is regulatory clarity. Remember when XRP was stuck in legal limbo with the SEC? Those days are over. Ripple won that battle, and now we're seeing the institutional adoption that was delayed for years. Banks are exploring blockchain tokenization, stablecoins are becoming mainstream, and XRP is positioned perfectly to capture that massive shift in how money moves around the world. Speaking of stablecoins, let's talk about RLUSD for a minute, because this is where the XRP story gets really compelling. Ripple isn't just launching another stablecoin, they're launching one of the most compliant, battle-tested digital dollars in existence. After years of regulatory warfare, they've built something that banks and institutions can actually use without worrying about compliance nightmares. And here's the kicker. Every transaction using RLUSD creates demand for XRP. It's not just a nice-to-have token, it's a necessity for the entire ecosystem to function. As RLUSD grows, and I predict it will capture significant market share from competitors, XRP becomes more valuable by default. But let's get back to those exchange numbers, because they tell a story that goes way deeper than just supply and demand. When whales move tokens off exchanges, they're making a statement about their confidence in future prices. They're essentially saying, I don't need liquidity because I'm not selling anytime soon. This is the same pattern we saw before every major crypto bull run. The smart money accumulates while everyone else is distracted by daily price movements. They understand something that most retail investors miss. Position size matters more than entry price when you're dealing with life-changing moves. I've been tracking whale movements for years, and what I'm seeing now reminds me of early 2017 and late 2020. The setup is almost identical. Regulatory clarity is improving, institutional interest is growing, and supply is getting locked up by long-term holders. The only difference this time is that we have better data and clearer signals. The market breadth indicators are also screaming bullish right now. We've seen 18 consecutive weeks with more stocks hitting new highs than new lows. That's the longest streak since 2021, right before we saw crypto explode to new all-time highs. And here's what most people get wrong about this signal. They think it means we're at a top. But history shows us that momentum can stay strong much longer than rational people expect. Markets can remain irrational longer than you can remain solvent. That's not just a clever saying. It's a warning about trying to time tops and bottoms based on fear instead of data. Right now, the data is overwhelmingly bullish, and fighting the trend has historically been a losing strategy. BlackRock is exploring ETF tokenization. JP Morgan is calling blockchain adoption a significant leap for the money market industry. These aren't crypto enthusiasts or retail investors. These are the most conservative financial institutions in the world, and they're rushing to get exposure to digital assets. When BlackRock, with over $10 trillion in assets under management, starts tokenizing ETFs, that creates massive demand for blockchain infrastructure. And XRP, with its speed, scalability, and regulatory clarity, is perfectly positioned to capture a significant portion of that flow. But here's what really gets me excited about the technical setup. We just broke above a major descending wedge pattern that had been containing XRP for months. This isn't some obscure indicator that only works sometimes. Wedge breakouts are among the most reliable patterns in technical analysis, especially when they coincide with fundamental catalysts. The price action is showing strength at every key level. We're holding above the 10 and 20-day exponential moving averages, which is a sign of underlying bullish momentum. And if we close above the 350 level, the next major resistance doesn't come until around 4 hours to 450. But here's where it gets really interesting from a technical perspective. If XRP breaks above its previous all-time high of 366, there's virtually no technical resistance until we hit psychological levels like $5 or $10. That's because price discovery above all-time highs is purely driven by supply and demand dynamics, not historical resistance levels. And with exchange supply down 90%, every dollar of new demand has exponentially more impact on price. It's basic math. If there are fewer tokens available for sale, buyers have to bid higher to find sellers. In extreme cases, this can lead to parabolic moves that defy all rational valuation metrics. Now, I'm not saying XRP is going to $100 tomorrow. That would be irresponsible and frankly misleading. But a move to $10 by the end of the year, given the supply dynamics, regulatory clarity, institutional adoption, and macro environment, that's not just possible, it's probable. Think about what a $10 XRP means in practical terms. If you're holding 1,000 tokens right now, that's a $6,500 gain from current levels. If you're holding 10,000 tokens, that's $65,000. These aren't lottery ticket gains. These are life-changing returns based on fundamental analysis and supply-demand imbalances. But here's the thing about these opportunities. They don't last forever. Once the broader market catches on to what's happening with XRP supply, the easy money will be gone. Right now, we're in that sweet spot where institutional money is accumulating, but retail attention hasn't caught up yet. The stablecoin narrative is also just getting started. As more banks and financial institutions adopt blockchain technology, they're going to need compliant, reliable stablecoins. RLUSD isn't just another digital dollar. It's been battle-tested through regulatory challenges and built by a team that understands institutional needs. Every major stablecoin success story creates more demand for the underlying blockchain infrastructure. USDT made Tether billions and drove demand for Ethereum and Tron. USDC did the same thing. Now, RLUSD is positioned to capture that same dynamic, except this time it's running on XRP Ledger, with XRP as the native token. The math is simple but powerful. More RLUSD adoption equals more XRP demand. More XRP demand plus reduced exchange supply equals higher prices. Higher prices attract more institutional attention, creating a virtuous cycle that can last for months or even years. I've been studying crypto markets for over 6 years now, and I've never seen a setup quite like this. The fundamental drivers are stronger than ever, the technical breakout is confirmed, and the supply dynamics are creating the perfect storm for explosive price action. But timing is everything in markets. And right now we're sitting at a critical inflection point. The Fed decision could be the catalyst that ignites this entire setup. If they cut rates while markets are at all-time highs, which history suggests will happen, risk assets like crypto could see the kind of rally that creates generational wealth. The institutional money is already positioning. BlackRock's Bitcoin ETF saw massive inflows. Accumulation addresses are being loaded up with unprecedented amounts of cryptocurrency. Smart money is making moves while retail investors are still wondering if the crypto winter is over. Here's what I'm watching for in the coming weeks. First, I want to see XRP hold above that $3.50 level on any pullbacks. That would confirm the breakout and suggest we're in the early stages of a major move higher. Second, I'm monitoring exchange supply across all major platforms. If the Coinbase drain spreads to Binance, Kraken, and other exchanges, this supply squeeze could get exponentially more powerful. Third, I'm tracking institutional adoption news. every partnership announcement, every regulatory clarity update, every stablecoin milestone adds fuel to the fire. And fourth, I'm watching Bitcoin's price action because crypto still moves as a correlated asset class, especially during major trends. The beauty of this setup is that it's not based on hope or speculation. These are measurable, verifiable trends that are happening right now. Exchange supply is down 90%, institutional accumulation is at year highs, regulatory clarity is improving, technical patterns are breaking out. All of these factors working together create the kind of opportunity that comes along maybe once every few years. I know there are people listening who got burned in previous cycles, who are scared to believe that crypto can deliver life-changing returns again. I understand that skepticism because I've felt it too, but successful investing requires putting aside emotional baggage and focusing on objective data. The data right now is telling a very clear story. XRP is setting up for a major move higher, potentially one of the biggest in its history. The supply squeeze is real, the institutional adoption is accelerating, and the macro environment is turning increasingly favorable for risk assets. But here's the thing about these opportunities. They require conviction to capture, waiting for confirmation, waiting for the crowd to catch on, waiting for safer entry points usually means missing the bulk of the move. By the time everyone agrees that XRP is going higher, it's probably already there. I'm not a financial advisor, and this isn't financial advice. But I am someone who's been studying these markets obsessively for years, someone who's seen cycles play out multiple times, someone who understands the difference between hype and fundamentals. And right now, the fundamentals are screaming that something big is coming for XRP. The exchange supply data alone should be enough to get your attention. When 90% of available tokens disappear from the most liquid trading venue, that's not noise, that's a signal. When institutional money starts accumulating billions of dollars worth of crypto right before a Fed rate decision, that's not coincidence, that's positioning. When regulatory clarity improves, when stablecoin adoption accelerates, when technical patterns confirm, when all of these factors align, that's when generational wealth gets created. Not when everyone agrees it's a good idea, not when the risk is gone, but when the opportunity is still being ignored by the masses. The next few months could determine whether you're telling stories in 5 years about the opportunity you caught or the one that got away. XRP is setting up for what could be its biggest move ever, and the supply squeeze we're seeing is just the beginning. Whether you're already holding XRP or considering your first crypto investment, understand that markets like this don't come along often. The combination of regulatory clarity, institutional adoption, supply constraints, and favorable macro conditions creates the kind of environment where 10x returns aren't just possible. They're probable for assets with strong fundamentals. This isn't about getting rich quick or gambling on meme coins. This is about recognizing a fundamental shift in how money moves around the world and positioning yourself to benefit from that shift. XRP isn't just a speculative asset anymore. It's becoming infrastructure for the next generation of financial services. The supply squeeze is real, the institutional money is flowing, and the technical breakout is confirmed. Everything is aligning for what could be the trade of the decade. The question isn't whether XRP will move higher. The question is whether you'll be positioned to benefit when it does. Remember, in markets, fortune favors the bold, but it also favors the prepared. Right now, we're in that preparation phase where smart money accumulates while the crowd debates. By the time the debate is over, the opportunity usually is too. The XRP supply collapse isn't just a statistic. It's a roadmap to what's coming next. And if history is any guide, what's coming next could change everything for those brave enough to pay attention.